Mr. Alok Bajpai, Group CEO at Ixigo, is now joining us. Mr. Bajpai, morning. Shesha here, and thank you for taking your time out and joining us here on ET Now. First up, let's talk about the GTV growth, which remained robust at about 19%, but margins clearly have disappointed this time around. Is this purely because of the company being in investment phase at this point in time, or is it business entering a period where growth will come at the expense of profitability?
Good morning, Sesha. Thank you for having me here. I just want to lay out, what's happening first on the macros. As we all know, due to the Iran conflict, what's happening on the airfare side is there's a 22% increase in domestic airfares. There's increase in international airfares in the 30s. And overall, there's a contraction in supply going on, right? Because Air India and Indigo have both cut back on routes. Now, as a result of that, the flights business, which for us is the largest by GTV at this point, right, was growing at 27% on GTV. Historically, it's grown faster, but because the volume growth this time has come in only at 4%, which is still the fastest in the OTA category, because most OTAs have actually degrown on the flights business this time around. But we managed to grow 4% there. I think the other thing that's playing into this is that there's some investment that we are doing in AI and in hotels specifically. So on the AI side, we are building the Ixigo Next platform, which is our next generation agentic platform, which we unveiled in May this year, which we are continuously building. And some of those costs get front loaded. So they're showing up in our tech spends. And of course, we've hired a few more people on the hotel side of our business where we've started to see some good traction. We've disclosed 500,000 heads on beds last quarter, and the fact that we have more confidence in achieving product market fit in the short term. So I think the way to read this result is that we have consciously used our operating leverage coming from our core businesses of train, bus, and flight into hotels and AI as investments. And we will reap the rewards of these investments in the years to come.
Okay, sounds good. And in fact, Mr. Bajpai, hi, this is Snehi joining in. Before I get to AI and hotels, and we've got a lot of questions on that front, I just want to talk about this summer that has gone by. This one particularly has been disrupted by geopolitical events. Compared to last summer, have you noticed any meaningful change in traveler behavior, whether it's booking windows, destinations, or spending patterns?
Yes, so we saw, in fact, quite a few new destinations start to emerge in the last, not just this summer, but the trend started last summer. Places like Vietnam, Japan, Indonesia. We've seen that on the international side, we've seen a good lift in these, triple-digit growth, in fact, on both Vietnam and Japan. We've also seen on the domestic side, right, a lot of interest for the hilly destinations on the bus side of our business, right? So the bus side of our business, in fact, was the fastest growing. And one of the reasons was that flights being too expensive and train capacity being perennially constrained, buses was the only vertical that gained full advantage of that with 39% growth YOY. So I think the biggest trend going on right now is that ground transportation is the fastest growing category in travel, and buses is leading from the front. It's a diverse group of supply there. The take rates are fantastic. There's limited competition. There's largely two big players. And I think we are confident that we will see this kind of secular growth in the years to come.
Okay, and since you touched on the topic of competition, let's also talk about that. Which segment is facing highest competition, and how do you aim to conquer that?
See, the way we look at competition is that we are playing in a very unique set of users. We are largely focused on the next billion user market in the way we've built our company so far, which was centered around acquiring train and bus users for utility use cases. And we see ourselves more as a peace of mind business and not just as a OTA selling tickets. So in that sense, we are uniquely positioned in the market. I think, when we talk about competition, we should also remember that in the past, OTAs have already gone through a phase in about 10 years ago, right, when there were multiple OTAs, multiple price wars, etc. So I think at this point the market is fairly mature. There are clear strengths that every player has and chooses to focus on at this point, and I think the two large players in this market, are both playing it very rationally.
Okay. And Mr. Bajpai, you've completed the Brevistay acquisition. Now let's talk about the hotel segment. Give us an
Yeah.
insight on how this acquisition is expected to contribute to the top line. What's changing for you in the hotels business that gives you the confidence that it can outpace your more established trains and flights businesses?
Yeah, the hotels business is the one that I'm the most bullish on over the next 4 to 5 years, right? I believe this will be our strongest growth driver. Last couple of quarters, it's been the fastest growing business from a GTV perspective. We have made significant investments, not just by acquisition of Brevistay, but also in our own organic approach to it. We have added direct supply, more than 10,000 properties we've signed up directly, and we are adding thousands of properties every quarter. And in total, we now have 70,000 plus properties in India, 1 million plus globally that we started selling on our platform. The best part, and that's how we are different, is that 90% of these transactions for hotels are coming from our own user base. We have a very large user base, 56.9 crores of annual active users, 85 million monthly active users, right? So in that sense, it's a very large base of middle-class travelers who are looking for mid-market budget hotels. And we believe that we have the right to win in that market over the next 4 to 5 years.
Mr. Bajpai, the stock is down more than 9%. Would you like to give some guidance with respect to what the full year FY27 could look like in terms of revenue and even beyond FY27? If you can share some back of the envelope working that you're working with.
See, I think in the past also we've said that we do not give earnings guidance at this point. What we can guide on is that, look, we want to be the fastest growing OTA player, and we've maintained that position the last 3 years, right? I mean, in fact, it's been 2 years since we've listed, and every quarter we have actually grown faster and taken market share in all categories we operate in. I think we want to maintain that momentum for the foreseeable future.
Mr. Bajpai, just to allay some investor concerns, give us an idea on when all of these investments that you are making on the acquisition front, on the AI front. I understand you're in the investment phase right now. When does all of that end? When does all of that translate into more meaningful revenues and margins? Because your margins are also slightly under pressure this time around. And I think this is largely the concern that investors are having at the moment right now.
Sure. So I think I'll just go back to a few years ago when we had no right to win on flights. And, we were making similar investments just after COVID, right? And I think if you see the trajectory since then, we've emerged as a very strong player, even on the flight side of our business, and we make money on that, right? Contribution margin has been fairly stable on that. In the past, even when we launched trains, the first few years required investment to build it out. And I think our long-term investors are supportive of the approach of building out hotels, in a similar manner where it does need some investment, but remember, it's coming from our operating leverage. We have come a long way from being, maybe 6 years ago, a loss-making company to today, being a profitable company and growing our profits year on year. I don't think we want to reverse that trend, right? So I don't think the market should read this as we want to go back to making losses at some point. No, we don't. We actually want to maintain profitability, but we also want to invest strategically in areas which will give us the long-term moats in our business, right? And I think AI, at this point of time, any company not investing in AI is making a huge mistake. So we are strongly believers of the camp that this is the most disruptive technology that has emerged in our lifetimes. And this is the moment to invest and make sure that it changes the trajectory for you in the future. I will not make future commentary, but you just have to look at our track record on what we did in every vertical we entered. In the first couple of years, we invested, but then post that, we were able to emerge as a very strong player.
I understand that, Mr. Bajpai. Just trying to understand if you can just give us a rough timeline as to when you believe the investment phase will be over.
Look, it's hard to say. If it depends on whether the product market fit that we're seeing on hotels is supremely successful over the next few quarters, right? Because if it is, we will invest more, right? And if we feel that it needs to it's going to take longer, and therefore we need to be more measured. We will be more measured. We've always been disciplined as a company. This company was built very frugally, and I don't think that discipline is going to go away anytime soon.
Okay, so that's the view coming in with respect to investments that are being done by the company, whether it is AI or otherwise. Mr. Bajpai, thank you so much for taking your time out and joining us here in ET Now. The stock, of course, is down 9% after the numbers that you reported, but the long-term outlook continues to remain positive. Thank you for joining us today. On that note, we need to slip into a very short break, but on the other side, we'll touch base with the management of Suprajit Engineering. Stay tuned to ET Now.